All right, everybody, welcome to HAMB's webinar today. We are here with LendSure. We've got LisaKathy Kirkbride, AE extraordinaire for LendSure, and then we've got Rick Harway, her regional manager, joining us today. And of course, thank you. And of course, I am Judy Meredith with PRMG, and of course, your educational director, along with LisaKathy for HAMB. So thanks for joining us today. We are going to give it about 4 minutes. We see some people actively joining right now. So we'll give them a few moments to join us. Rick, where are you sitting today? Where are you taking the meeting from?
I am in sunny San Diego. It's not quite as nice as Hawaii, but not a bad second alternative, that's for sure.
Very similar. In fact, most people would say that Hawaii follows San Diego. So whatever happens in San Diego comes over to Hawaii in about 6 months.
Oh, that's funny. We like to think the opposite. We try and follow you all. Be a little more relaxed, a little more laid back out here, and be able to help folks out, finding financing options, but do it in a very casual, laid back approach.
Absolutely. And then what about for fun? Here we do a lot of surfing, water sports. What about San Diego? What do you do for fun over there, Rick?
So I've got 2 young kids at home still, one going into high school, one going into middle school. So a lot of kid activities, but usually revolving around baseball for us. My older son's starting to get into golf a little bit, so maybe, because I'd love to get out and play golf myself, but hopefully he'll get into that, and that could be something he and I can get out and do together. My wife loves to ride her bike too, so anytime we can all get on bikes, that's always a big plus for us.
That's awesome. Thank you for joining us today, Rick.
Yeah, absolutely.
LisaKathy, you're over there in Maui.
That's right, and we are not sunny today. It's raining today.
Awesome.
Which is nice because we need the rain.
Tell us a little bit about what's happening building-wise and things like that since the fires, and how's the housing shortage?
So the housing shortage still continues. However, they were fast-tracking permits, but only for the Lahaina region. Permits on other parts of the island are still backed up 8 to 12 months. So, which makes our fix and flip very difficult because it takes 8 months to get a permit sometimes, or longer. So hopefully we can get that expedited here. But in Lahaina, they fast-tracked the permits. They've got several houses up, a lot of housing finished, and the first business just reopened right before the anniversary of the fire. The Hawaii Surf Company just reopened in Lahaina.
Oh, wow. That's good news.
Yeah. So you can see a lot of progress there, and a lot of good things happening. There were several houses where people had to leave, but they were able to keep the land in Hawaiian hands and sell back to other Hawaiian local families. So that's always good to hear.
Awesome. That's good. Well, that's definitely a very good start, and obviously more amazing stuff to come. So looking forward to it. Thanks for the update, LisaKathy. Okay, we are right about 10:04. I think we can get started. So again, for everyone that has joined, thank you so much for joining us today. You are in the HAMB webinar, Hawaii Association of Mortgage Brokers. Our guest speakers today are LendSure Mortgage Company, Bridge the Gap, Skip the Tax, and Cash In on Those Condotels. I love that name. That is so catchy. But thank you for being here with us today. We've got LisaKathy, AE for LendSure. We've also got Rick Harway, Regional Manager for LendSure. And then go
ahead, Judy. I'm so sorry. I thought you were done.
No worries, no worries. I was just going to go through the sponsors. So let's go take a moment to thank our sponsors for HAMB. We have got our platinum sponsors, Freedom Mortgage, The Loan Store, PennyMac, LendSure, Deep Haven, New Res, and Dekind Lending. And then for gold sponsors, we are proud to have Finance Factors, Title Guarantee, Angel Oak Mortgage Solutions, Territorial Savings, Acra Lending, NewFi Lending, Home Express, Foundation Mortgage, and Advantage Credit. And our silver sponsors, Open Mortgage Wholesale, First Hawaiian Bank, Cardinal Financial Company, The Lender, Remen Wholesale, and Logan Finance. Thank you all to our sponsors. It is you that keeps us going and brings so much to the table. So thank you so much for your sponsorship. We truly, truly, truly appreciate you. Let's talk a little bit about some upcoming events. So taking a look at what's coming up, we have got our CE course along with our conference coming up in September. So for those that have not signed up yet, we still have our early bird prices going on. 2025 HAMB conference, and that is going to be September 17. In the morning time, we'll have our CE, and then in the afternoon, we will have our trade show with all the sponsors, and of course, poo-poos and drinks and snacks and lunch and all that good stuff that goes into it. So looking for you all to be there with us. And then of course, on 2 days after that, September 19 is our joint golf tournament with AI, Appraisal Institute. So again, please make sure that you sign up for our conference, and please make sure that you sign up for that golf tournament. It is going to be a blast. All right. So LisaKathy, go ahead, take it away.
Hey everybody, I'm LisaKathy Kirkbride. Some of you already know me. I'm your local account executive for LendSure. I live in Maui, and I fly to Honolulu about once a month to meet with brokers. So if you want to schedule a meeting with me, feel free to reach out to me anytime. I am going to talk about some of our core big products here that really make lending for you guys easier. We have some niche products that most people don't have. We're going to start with the bridge loan, which is why we say bridge the gap. And then we'll go into our 1031 exchange, and then we'll talk about our Condotels and how we handle those. So right now I'm going to turn it over to Rick so he can tell you why you should partner with LendSure.
Hi, afternoon, everyone. My name is Rick Harway. I'm the regional manager here with LendSure, and just wanted to walk through a little bit about LendSure to share with you some of the things that make us unique. Probably the most important piece of the puzzle is, for us at least, is the flexibility that we provide. We provide a ton of solutions, many of which we'll highlight here today. In doing so, a lot of the loans that come to us typically are that proverbial square peg into a round hole. One of the things that we really value on the front end of our process is we pre-approve 100% of our loans. That way we know once the loan's pre-approved, it usually feels as if we're going downhill as we head towards CTC and ultimately funding, because we've addressed all of the big issues up front. So that pre-approval process is a really, really important process for you to be able to get back to your clients quickly, know that we're doing a loan up front, so that if they decide to move forward, especially as a TBD, it's something that we can go out with confidence and be able to aggressively pursue a property. We have very experienced account executives, regions that are specific to certain territories, obviously bringing a ton of expertise, as LisaKathy will talk about, but having a local presence out there in Hawaii is something that is really, really important to us. And having LisaKathy on the team is a big part of our success for sure. And then lastly, the communication between brokers and underwriters is facilitated by the account executive. We won't hesitate if we need to get the underwriter on the phone to be able to address whatever issue we might be facing or challenged with, so that we can work through that together and be able to address those things up front. And then lastly, I would say too, that wasn't on here, is an unmatched pricing flexibility. And we'll get into some of those highlights too. A lot of different pricing tools available to be able to structure loans with customized pricing depending upon the borrower's needs. That's it. LisaKathy, I think you're on mute.
Thank you, Rick. I didn't even realize it. So sorry.
No problem.
So like I said, you didn't hear, we're going to talk about bridging the gap. And what that means is bridging the gap between selling a home and buying a new home, whether that be your owner occupied property, your personal home, a second home, or an investment property. We can do bridge loans on all of those occupancy types. So our Boost program specifically designed for borrowers to be able to take the equity out of their current home and use that to purchase a new home. They have 12 months to sell the old home. And during those 12 months, they will have no payment, including taxes and insurance on their departing residence, which gives them more room for buying a larger house, getting a larger loan, because it doesn't affect their DTI. A lot of other lenders will have an interest-only payment or some type of payment on their bridge loans, which will hinder their ability to buy a larger property. So the way it works is the bridge loan is going to pay off your existing mortgage. We're going to escrow 12 months of taxes and insurance. And if you have an HOA, we don't typically take that up front, but if for some reason it is affecting your DTI, especially here in Hawaii, some of our HOAs are $2,000 a month. You can take some of that money from those proceeds and pay it for 12 months in advance, therefore eliminating it from your DTI. The only thing I'd like to caution about that is that when you're selling your departing residence, if you've paid the HOA up front for 12 months, you want to make sure you negotiate that with your realtor, because that's not money you're going to get back from us. So you want to make sure that the person buying the home that's considered and that's part of their payment, or if you want to gift it to them, that's entirely up to you. But just make sure that you know that that is not escrowed and it will be coming out of your proceeds, not out of ours. There's no payments, like I said, on the bridge loan for 12 months. And then we will do the combined purchase with that at the same time. So what we're going to do is we're going to take the purchase and treat it like a regular super prime loan. Depending on credit, of course, obviously. But 90% of our borrowers have over a 720 credit score. So I'm just going to go with the majority here. And what we do is we'll price that purchase out very competitively. A lot of these people we know will qualify for conventional loans. However, if you're going to use the bridge product, you want to do it together. We're going to close them simultaneously. We're going to fund them simultaneously. It makes it much easier for your borrower. It makes it easier for you. And therefore, now you've eliminated that payment on your departing residence, and you can move into your new home with less stress. So just an example of what a bridge loan looks like. We're going to go up to 75% as our max on our owner occupied.
Mm-hmm.
So let's say you have a $1.35 million property and you're going to go up to 75%. So now your loan amount is $1,012,500. We're going to pay off the existing mortgage. In this case, on this example, it was $342,000, some change. And then we're going to deduct the closing cost and the fees, and then the taxes and insurance. So now you have a purchase price of your new home of $1.5 million, a loan amount of $1 million. You're going to put the $500,000 down, and then your closing costs, everything included, you're going to still have $42,000 left over. What you can do with that $42,000 is take that money and put some renovations into your departing resident. Now you can sell it for more money. Maybe you want to upgrade the kitchen or the bathrooms. Those are always big selling points. So you have the ability to get more out of your departing residence now as well. And you don't have the hassle of having to move in one day. So the eligible properties, like I said, primary residence, second homes, investment properties, condos, single family residence, PUDs, townhomes. The investment property is a little bit different because of the exchange. You have 6 months balloon instead of a 12-month balloon. And we'll get into that in our 1031 exchange reverse bridge when we talk about that as well, which is where we're going next.
Yeah, LisaKathy, actually, before we go there, there's a couple more things I wanted to touch on with the bridge. Can you go back just a couple slides?
I can try. I just tried to do that. Hold on one second.
Yep. Well, there you go, right there. So one of the things that's really important to underline with regard to our bridge/boost program is, as LisaKathy did a really good job of highlighting, that we can use the proceeds from the bridge loan to cover closing costs, pay off debt, cover moving expenses, furnish the new home if they want to. Again, she talked about utilizing that $42,000 maybe to maximize profitability on the home that they're selling. We've also, in some extreme cases, used that as income. When we have borrowers that might be a little light in the income area, I'm thinking of possibly retirees, right? They're on a fixed income. They're no longer bringing in income, but they're equity rich. They have substantial equity. Thinking of two scenarios that we did earlier this year for both borrowers that were retired, two separate transactions not related to one another, but both similar circumstances. They owned homes here in California and they were looking to relocate to be closer to their adult children and their grandchildren out, and one was in Tennessee and the other one moved to Colorado. They cashed out their home that was free and clear here in California. They were on Social Security and a very modest pension, and we took a significant amount of the equity from the homes that they sold and used that towards an asset depletion calculation, and we're able to help them qualify for the purchase on their new home. I know the Hawaii market is fairly unique. By no means do I pretend to be an expert, but I know a lot of people that are out there that you might be dealing with a lot of retirees. So I felt that it was important to note that, or folks that either can't really document their income through traditional methods and they need some alternative sources to be able to do it. And again, leveraging that equity to be able to help contribute towards income is another valuable tool with this program in particular. So thought it was worth sharing that.
So that's something I learned new today. So it looks like we're all learning today.
Yeah, good stuff. All right.
I will tell you the bridge loan is my most popular product. It really takes the hassle out of being able to buy a new home without having to sell your departing residence. It makes it better for your realtors as well, because now there's no contingency offer.
Yeah, that's a super powerful thing to jump on your coattails, LisaKathy. And furthermore, we're a company, we're pushing towards 250 and hope to be at north of 300 million by the end of this year. And I will tell you right now, 65% of our business today is made up of the bridge program, whether it's a primary residence or a non-owner occupied property, the reverse or bridge loan program for our investment properties that we're going to talk about here next, makes up about 65% of our business today. So it's a significant amount of our volume.
And to speak on Rick's point, it's 90% of my business here in Hawaii. And it's really important here in Hawaii because you don't want to just lose out on maximizing your revenue on your sale, because it is a market here where it's very competitive, and you'll be able to take your time and sell it for what it's worth instead of having to rush and sell it for less than it's worth. Now on that, we're going to move forward with the defer your capital gains taxes with the 1031 exchange. And I'm going to let Rick speak to this. There's several 1031 exchange programs, and Rick's going to talk about them.
Yeah, a couple in particular that we're going to really focus on is the traditional 1031 exchange and then the reverse 1031 exchange program. The programs allow the borrowers to be able to transfer the equity in an investment property over to a new investment property, typically a similar type property. So one thing you cannot do is sell an investment property and turn around and purchase a primary residence and be able to avoid any sort of capital gains tax, which is really the motivation behind a 1031 exchange. So most investors are quite familiar with 1031 exchanges, and something that we have a tremendous amount of expertise in and have the ability to be able to go through and navigate through that process with you and your client. Leveraging our ability to buy before you sell is certainly something that's really, really important when looking at the reverse 1031 exchange option. And traditionally, these types of options, either it's cash in hand historically, and they've been all purchased with cash, or it's been hard money financing. And this is a nice alternative to be able to do that, to be able to provide to those options with far superior pricing. All right, so as you can see here, the reverse 1031 exchange allows the investor to proceed with the acquisition of the replacement property without having to wait for the original property to be able to sell. And that's a huge competitive advantage. Again, not having to make a contingent offer, not feeling like you constantly have a deadline. Reversed or a 1031 exchange has a 6-month window to be able to avoid any sort of tax implications. Knowing that you already have a place where those proceeds have been placed up front alleviates all of that pressure that the buyer would feel in the event of a traditional reverse 1031 exchange without the bridge loan. Furthermore, it gives the investor time to be able to make improvements. LisaKathy talked about that earlier with a primary residence purchase, even more so or every bit as much, certainly with an investment loan as well, and selling that investment property and potentially being able to increase the value over and above what the market asking price would be. Those are all really, really valuable options available. And we have the ability to be able to do this on a DSCR program, full doc, traditional income, or utilizing bank statements, certainly asset depletion I touched on a moment ago, or an asset qualifier, or any combination of those. We specialize as well in using multiple revenue sources and or income sources, whether it be for multiple borrowers or from one borrower, and being able to blend all those together to be able to help the client qualify. And then last but not least here is we go through, it doesn't interfere with a reverse 1031 exchange. You know, typically these borrowers are very experienced, savvy investors. They're already aligned with a qualified intermediary, which is also known as a 1031 exchange company, that walks them through step by step the different stages or milestones that they need to meet to be able to close on these loans. And our bridge program is customized to be able to walk lock and step with the qualified intermediary through each one of those steps to ensure that the loans close concurrently. Just checking to make sure there's nothing in the chat. So this is an actual reverse 1031 exchange example. So as you can see over here on the right-hand side of the screen, we had property A that was in Bozeman, Montana from an investor. This is 2 transactions that we closed earlier this year. They had a home in the Bozeman, Montana area worth a little over $900,000, as you can see. We did a loan at 60% loan to value. They own the home free and clear at the time, and we took out a loan for them utilizing our reverse 1031 exchange bridge loan. We took the loan out at $558,000. The proceeds to the borrower were $558,000 minus the closing costs. They utilized those proceeds to purchase a new home in Lake Tahoe, California. Obviously, a little bit of a step up from the $930,000 value in Bozeman to the $1 million value in up there in the Lake Tahoe area up in Northern California. And they did a new loan a little over $442,000. Ended the day at 42 LTV. And we were able to close all of that in about 2 weeks' time from origination to close. And again, not have to worry about the 6-month period of being able to sell the home and then turn around and find another home and then be able to close on the new home. All they had to focus on was selling the home out in Bozeman, Montana, which worked out quite well for them. I think they ended up selling it about after 3 months.
I'm going to move on. So we have Condotels versus non-warrantable condos is our next subject. And I want to talk about this because what Fannie Mae and Freddie Mac consider a condotel is not necessarily what we consider a condotel. So it's very important. Some people come to me and say, oh, I have a condotel. I'm like, are you sure it's a condotel? So we're going to get into that a little bit here. So condotels typically operate as hotels. They're very common in Hawaii, as you know. They're very common in Florida, and a couple other markets are starting to pick up, Chicago, New York, some of the bigger cities. But Southern Florida and Hawaii are probably the 2 biggest markets for condotels. Now, a condotel offers everything that a hotel offers. The difference is between Fannie Mae, Freddie Mac, and us, is Fannie Mae and Freddie Mac say it's a condotel if it has a hotel desk, if it has a reception desk. Well, for us, it's a little different. It has to be included in a rental pool to be considered a condotel. Fannie Mae's guidelines are very strict on condotels, and they consider things condotels that we just don't consider condotels. We consider them non-warrantable condos, and we'll get into that. But our Condotel program guide, like I said, a rental pool is the focal point determining if it's a Condotel. Not all of the properties that Fannie and Freddie deem as Condotels have rental pools. Some of them just have a reception desk, and that's enough for them to call it a Condotel, but it's not enough for us to call it a Condotel. So when you have something that you think is a Condotel, please reach out to me. Let me take a look. I know which properties are and which aren't, and the ones that I don't know, I will find out for you. So on our Condotels, we'll go up to 75% for purchases, 70% for refis, and 65% for a cash out refi with a 740 score or higher. Now, we always want to be above 600 square feet is kind of our thing, but I have done places as small as 300 square feet with a full kitchen. The full kitchen is the deal breaker for us, right? So if it looks like a hotel room and has nothing in it at all, we're not going to do it. If it's 300 square feet and it's got a small stove and a fridge and a big refrigerator, that's a kitchen. If it's got a stove, a stove and a small refrigerator, that's a kitchen. If it has a full-size stove and burners, that's a kitchen. It doesn't have, I mean, a full-size fridge and burners. It doesn't have to have a range. If it has built-in burners and a refrigerator, we consider that a kitchen. Now, if you're concerned, is this considered a full kitchen? Is it not? Send me the property. I'll look it up. I'll run it by to make sure it fits in our category here. And again, like I was saying, any condo doesn't meet Fannie or Freddie's qualified guidelines, including required memberships, operates as a hotel or motel, pending litigation. Those are all non-warrantable condos. So if you have a hotel desk, but you don't have a rental pool, we would consider that a non-warrantable condo. I've seen it happen. I've closed loans like that. People come to me and say, oh, it's a condotel, it's a condotel. It's not if it doesn't have a rental pool. That's the big thing. If you're concerned, again, let me look at the property, give it to me. I'm familiar with 90% of everything on Maui and about 80% of everything in Honolulu. When you get to Kauai and Big Island, I have to do a little bit more research. I don't do as much businesses there as I do in Honolulu and Maui, but that's everywhere because there's just more people here and there's more business in these two islands, right? Now, we can use short-term rentals on condotels and on non-warrantable condos and on any property really that qualifies for short-term rental. And how we do that is we go to this website called AirDNA. If you don't have it, program that website, airdna.com, save it into your browser because you're going to want to use this as a tool to figure out what the short-term rental income is for that particular property. You pop in the address, it gives you an estimate. Now, I will say this, it's not 100% accurate, nothing is. And sometimes in some areas of Hawaii, it will shortchange you. I've had some say, oh, it's only $200 a night when we know in Maui it's $500 a night. It might just be that there were some particular properties in that particular complex that were renting for less at the time that they did the research. So what I say is do the AirDNA for conservative view. And when we order the appraisal and you order the 1007, let them know that you're using short-term rental income. There are appraisers out there do short-term rental income comps now. You just have to ask for it in the comments when you order the appraisal. So just make sure you're doing that because a lot of times you'll get a lot better than AirDNA from the comps.
Hey, LisaKathy, can I chime in really quick on the condotel piece?
Absolutely.
Yeah, specifically for the smaller square footage. Again, ideally, we'd like to be 600 square feet, but we understand, and we've closed a number of loans, as LisaKathy had touched on, well under 600 square feet, specifically in the Hawaii market, because I know it's fairly common over there. What we're going to primarily look for when we come across that, and we'll entertain those case by case, varying from one deal to the next, depending upon how much we like the property, obviously how much we like the loan to value, and how much we like the borrower. But one of the things we're always going to universally look for is to make sure that there's similar comparable sales within the complex. So if we have under 600 square feet, hopefully we have a couple of model matches. Maybe they did a couple studio apartments when the property was originally developed, or there's been a couple that have been converted to studio apartments that are fitting that 300 to 400 square foot range, and at least something that's sold, relatively recently that we can look at to be able to establish the value. If we have that, 9 times out of 10, we're able to find a way to make the loan work and be able to continue to move forward. It's when we don't have that, when we still have found ways to close loans when we don't have it. Closed one earlier this year as well in Hawaii, where it was the lone property in the complex. It was 350 square feet, but we were able to find 3 similar style comps in properties within a mile of our subject property and still be able to make the loan work. One other thing I would recommend with those two is those are the loans where we're not going to be looking to push the maximum LTV. So I'll probably look to reduce the LTV just a little bit, 5, maybe 10%, depending upon the credit profile, and be able to help you out with those smaller square footage condotels as well, obviously, or non-warrantable condos, as well as anything over 600 square feet.
Yeah, like Rick said, I've closed several under 400 square feet here, actually. I just closed one recently that was right at 306, but again, it had a full kitchen, and it was actually all the way out in Macau. So, and we did it at 65% LTV because of the low square footage, because of the price of the property, because of where, all these things come into play, comps, all those things. So again, if you have questions about the square footage, the condotel and all that, give me a call. I can do, if I don't know, I'll do the research for you and find out if we can and cannot make this happen. Again, the most important thing to ask your realtor when they come to you with these condotels with the small square footage is, does it have a kitchen?
Yep.
Right now, I'm going to go on to share some of the tools we have here. So we have a number of resources available. The link is here. You will get a copy of this webinar also after, but if you click on this link, we have private label resources, we have infographics, flyers, we have all the things you need. We have non-QM white paper, we have letters drafted that you can plug in your own information for your realtors on the bridge loan, for your clients on the bridge loan, to explain it to your realtors and to your clients. If you have a realtor office that you work with on a regular basis and you want me to explain the bridge loan to them, I am happy to do a presentation for the realtors offices as well. I did one at Caldwell Banker Island Properties here in Maui not too long ago, and it went over really, really well. They love this program. So make sure you tell your realtors about this bridge program. It helps them. You can get them more commission if they can get more for the sale of the property as well. Anything you want to add to that, Rick?
No, I just think it's a dynamite resource to be able to utilize, where you can take this very unique program, or this couple of programs that we've talked about here today, be able to add your own contact information and utilize our program and present it as your own. It's been really impactful with the folks that have been utilizing it. And again, we're pushing towards 250 million this month, and at least 65% of that volume is going to be made up of these programs we've talked about today, primarily the bridge and or reverse 1031 or 1031 exchange variety, coupled in with a smattering of condotels and non-warrantable condos too. We do a fair amount of that also.
Okay, at this point, I would like to open it up to questions that anybody may have.
I've been keeping an eye on the chat and haven't seen anything in there yet, but
Awesome. Thank you so much, Rick and LisaKathy. I have so for everyone on the call, yes, the chat box is open. So please make sure that you're asking your questions for our guest speakers so that they can give you the answers that you need. While we're waiting for those questions to come in, I have a few of my own questions. First off, I wanted to say thank you, LisaKathy and Rick. I was taking a look at your guidelines on your bridge loan. So I personally, as you know, just completed a bridge loan with you. We signed both of them yesterday. And compared to other bridge loans that I've done in the past, it was relatively painless. I mean, the reality of it is they are challenging loans, so they do take a little bit longer than they generally do. And then for my specific case, we had the larger loan amount, so we had some special things like 2 appraisals and things like that, but we got through it. The communication was great. In fact, towards the end there, Lisa and Kathy, I think you and I were on the phone like almost every single morning trying to hash out conditions and work through that stuff. I think is really the biggest thing is the communication and the support when you are facing a challenging loan program. So thank you very much for doing that. And I saw your guidelines that traditionally you are doing on the bridge loan, the refinance, you're doing 75% and then 60% on the purchase. But I believe that you were able to get me an exception. So I got 75-75. So 75% on the cash out and then 75% on the bridge, which was very, very, very helpful, and a 15% LTV exception on that purchase. So, so I just wanted to share that with the group, that is definitely possible and that you were able to secure that for me. And then like you said, Rick, up front, right? So it wasn't a big surprise or anything that was left towards the end with a big question mark. Once we stepped through the pre-approval process, that we were able to confidently go back to our buyers, confidently go back to and sellers, actually, because in that space they're buyers and sellers, and let them know that we had a confident program for them. And I think that the message that you talked about today, which is the biggest problem here in Oahu and in Hawaii, I think, and in fact, I've heard across the nation that everyone is trying to solve, which is, I want to buy something and I got to sell something, but I can't get that something to sell, or at least in time,
Right.
or in a space close enough together that we're not homeless for 6 months or whatever the case may be. So I think that's very, very powerful.
I appreciate that, Judy, very, very much. You just provided some real life context to the things we talked about that I'd love to, again, come back and underline. So number one, the power of the pre-approval process, right? Especially when you have, I describe it as that square peg into a round hole, tough loan, whatever you want to call it. You know, 75% of loans that we close have multiple exceptions on them. And Judy just provided some real life examples of that. We address all of those items, or as much as we can, as much as we know about, up front. And that's where that pre-approval process becomes invaluable. And then number two, the value of an experienced account executive. And again, LisaKathy's been with us for a number of years, has extensive tenure within the industry, knows the Hawaii market specifically, and many of the challenges that you all face over there. So being able to go through that, of course, I'm getting someone calling me while I'm trying to talk, but as we go through that, it's important to have someone with LisaKathy's experience to be able to shepherd you through that process. And again, Judy just described that too. So we appreciate that testimonial very much. We promise we didn't set it up that way to close those loans the day before. It just miraculously happened like that. But the timing of it, again, couldn't have worked out better, not only for you and for your clients, but to be able to share that here means an awful lot to us. So we really, really appreciate it. Thank you.
And I think it's important to mention, it was a very difficult loan to begin with, and we worked really hard together, Judy and I, to get this loan approved. And we're really excited that the borrowers were able to live in their dream home and get everything that they wanted. I know that it's been a long process for them and a very stressful process for them. So we're really happy about that. And thank you so much for sharing, Judy. I appreciate that. I also wanted to speak to a little bit, you know, Rick saying, I've been with LendSure for quite some time now. However, what most people don't know is I'm not just a salesperson. I was in ops for 25 years. I was an operational manager. I was an underwriter. I was a processor. I was every grunt that you could from the beginning of time. I've been in this industry for 30 years. I started out at the bottom with carbon copies, taking applications. So there is not a job in this industry that I haven't done, even reverse and servicing and everything in between. So I understand the pains of everybody on your team, not just the salespeople, but also your processors. I understand the underwriting process, and I'm here to help you. So please, by all means, reach out to me. I am local. I am always available. You can, and I say this, and people say, don't tell people this, but I tell them all the time. You can call me up to 9 o'clock at night, any day of the week. I will be here for you.
Awesome. Thank you, LisaKathy. I've got a couple extra questions that may interest the group as well. So you talked about AirDNA. I know that there are differences in lenders as to when you run AirDNA, are you using 75%, 80%, 100%? What is your guideline on AirDNA and income usage?
You want to tackle that one, LisaKathy, or you want me to?
Can you please? Sorry, I was reading.
Yeah, no, that's fine. AirDNA, our guideline is 75% of the AirDNA rents. We have made exceptions with short-term rents when we can get the short-term rents reflected on the 1007. Then we have the capacity to use 100% of the rents when looking at a DSCR loan. In other words, using the rental income to qualify the loan and not using any other source of income to be able to qualify. So long-term rents, we definitely use 100%, but specifically with short-term rents, 75% of the guideline, but we have made exceptions. Again, right circumstance, right borrower to use 100% of the rents to qualify, and have done it a number of times in Hawaii, because obviously short-term rents are a little more common there than say they might be here in San Diego. We have our fair share of short-term rental properties too, but not quite the concentration that you all enjoy over there in Hawaii.
Yeah, I was going to chime in on that. The short-term rental market is huge here, and I have typically been able to get 100% use of what's on the 1007. And that's why I say,
oh, I'm sorry, go ahead.
That's why I say when you order your 1007, make sure that you write in there that you want to use short-term rents. Most appraisers do them now. So if you're having problems with that, let me know.
Really, the determining factor for us to use 100% of the short-term rents is it a commonly, or is it a common vacation destination property that we're looking to make the loan on? And again, that kind of goes without saying in
Right.
Hawaii, so over there on the islands. But we'll do it here in this, domestically too, in the States. Big commercial or vacation areas, ski resorts is one common thing that comes to mind for sure.
Awesome, thank you. Okay, next question. In regards to condo review, so here in Hawaii, we are having so much fun with our condos between sub-limit insurance, assessments, repiping projects, litigation, mediation, all of the fun stuff that we get to deal with. Tell us a little bit about your condo review process and your tolerance in some of these areas.
Yeah, so our condo review process, we have our own HOA form that we require to be completed in order for us to be able to fund the loan. There are some specific questions we want to look at: ownership concentration, investment property versus primary residences or owner-occupied properties within a complex. Do you have one entity that owns a large portion of the units, or things that we specifically look at, plus reserves and what have you? But all of that being said, usually we have the ability to be able to close on all of the issues that you listed off. Underinsured properties, typically our solution there is, depending upon how much the properties are underinsured by, obviously in extreme cases, it gets really tough. But if the HOA, just insurance costs are getting so high, most HOAs aren't covering those costs the way they have historically. So what we're finding as an alternative solution is to have the borrower provide a supplemental insurance policy just for their individual unit, and we're able to make that work. So God forbid, in the event of a fire or something else where there would be mass repairs needed or rebuild needed, that we would still be able to rebuild the property and be able to make that work. So those are things we can do. Minor repairs, deferred maintenance before it gets completed, those are also things that we can do. Pending litigation, as long as it's nothing specific to compromising the structural integrity of our property, are also things that we can work with as well. If something's minor and they're going back to sue the builder, is probably the most common theme that we see. Those are things that we can work with, as long as it doesn't impact our unit. And if it does, then we'll review that in detail to find out if that's something we can entertain as well. Does that answer all your questions? Oh, go ahead. I'm sorry.
Sorry, I'm going to speak on the Condotel questionnaire because Rick doesn't know this. but 90% of the companies here will not fill out our form.
Ah,
So I have permission to use the RR105C, but what I ask is there's some questions that we need that the RR105C doesn't answer. So what I typically tell people, get me the RR105C, the budget, and the reserve study. And typically we can get all of our questions answered with those three things. However, if for some reason we can't, we have been very successful at getting the few questions answered from people. So we haven't had an issue with that. Some of the smaller complexes, especially on Big Island, that might have like only 10 units or something like that, they're a little more willing to fill out our questionnaire. But as we know, in Honolulu, these giant complexes that are managed by Hawaiiana or any of these other big companies, they won't even answer the phone, let alone fill out a questionnaire for us. So again, get the RR105C, reserve study, and the budget, and that's usually enough for us to get to where we need to be with that.
well, now we're all learning something.
Thank you. Awesome, LisaKathy. On that note with the Condotels, you had mentioned what makes it a condotel with LendSure is going to be the rental pool. Now, I have come across properties that have a rental pool in the building. However, it's not mandatory that every owner use the rental pool, and so they choose to stay out of the rental pool. So our subject property may not be in the rental pool, but there is an existing rental pool happening, you know, in the building. So how do you handle that, and how would that be classified?
Rick, I'm going to let you speak on that because I'm not 100% sure. I haven't run into that myself yet.
Yeah, we're not, yeah, I can speak to that, no problem. We're not overly concerned with if they're a participant in the rental pool or not. You know, if they're utilizing the property as a short-term rental property, is typically the case with a condotel, and they use one of the many other platforms that are available out there. I'm sure we're all familiar with the various platforms available, and they can provide 12 months worth of rental history and with the documentation, be able to back up how much they've received in rent over the last 12-month period. So that way we can speak to some of the peaks and valleys that might happen, maybe not as applicable in Hawaii, but I think of a market, say, like Phoenix, Arizona, 7-8 months of the year, huge rental usage in that market, right? Specifically in the winter and fall for various sport and outdoor activities that can take place there. But obviously it's in the middle of the desert, and through the summer, there's little to no rental activity because of the extreme heat that they deal with. So that's why we require a 12-month look at the rents. Or again, looking at whatever the 1007 rents are going to come back with as well. Those will be the ways that we would navigate through that. So they don't have to be in the rental pool per se. For us, it's going to be probably as much about, well, how is the condo complex zoned and marketed, as well as the kitchen piece or kitchenette piece that LisaKathy talked about in extensive detail. You know, if it's just, hey, it's a hot plate on top of a set of dresser or something like that, that's not going to constitute a kitchen for us, obviously, and not going to work.
Yeah.
We're going to call that a hotel and not be able to look at it as a condotel. But if it does have a small to modest kitchenette, or even a nice sized kitchenette, if it happens to be a larger unit, absolutely, those are properties that we want to be lending on, and we'll lend on those aggressively.
Great, thank you. And I think that was segue into my next question, which is, you know, here obviously in Hawaii, we've got our condotels, and we've also got our distinct lodging units. Very much like you stated, you know, they don't have a full-blown kitchenette. They've got the sink in the bathroom.
Mm-hmm.
They've got a little area where they've got that hot plate, and they've got that little baby refrigerator that you have in your hotel room. So what I'm hearing is, if we have a lodging unit, that's not technically your forte.
What you just described, that last unit that you just described, I would say that probably would not be a property that we would look to lend on.
Right.
That being said, as LisaKathy touched on earlier, if you have one and you think, shoot LisaKathy the subject property address, give her some of the basics on the loan. We're looking for this LTV, whether it's a purchase, a refi, cash out, whatever the scenario is, and she'll make that determination pretty quickly. And if not, the rest of us are certainly here to be able to provide a second set of eyes to be able to look at stuff to make heads or tails whether or not we think we can lend on the property or not before you even start putting a package together, let alone submitting it.
Absolutely, and thank you for that. And I think that in that space, especially when it comes to lodging units, really kind of understanding the difference as a lender and being able to kind of say, yes, that's something that we will do, or most likely that will not be something that we'll do, but we'll take a look at it, because that does show capacity for understanding. And of course, additional work on the broker's space, right? That
Yep.
Rather than just we'll do it, bring it in, and then have it be a no from the beginning. So thank you for that.
Yeah.
Wonderful. I don't have any other questions. Let's look at our chat and see if we've got any other questions.
I'm not seeing anything in there. Do you?
I do not.
Okay.
So for everyone on the call, the question box is open. If you have a question for LendSure, please make sure to type it in. We'll be more than happy to discuss it with you. Wonderful. Is there something else that you would like to talk about, Rick or LisaKathy?
I can't think of anything off the top of my head. Like I said, with the Condotels, feel free to reach out to me. If you have a problem, you need a bridge loan, again, I'm here to help you with that. The other thing I'll mention is that ran into this recently with your loan, where the appraiser tried to say it was a rural property. So in Hawaii, everything is close enough to a major city that it's not rural. So we're not in Montana. We're not having these big, giant 10-acre farms, things like that. If you want to consider it that way, Hawaii itself is rural because we're in the middle of nowhere, right? So keep that in mind. If you have a property that's on, large acreage is very common, especially here in Maui. So we can go up to 10 acres. So I've done a property that had 4.5 acres up in Haiku, and it was on a water catchment system and solar and everything. So we were able to do that one as well. So it just depends on how it's, set up and how it's done. But if the catchment and the utilities are all on the up and up, then we can do it. It doesn't have to be city water. It doesn't have to be, city, county stuff. So again, these are properties that a lot of lenders won't touch. I know First Hawaiian Bank and Bank of Hawaii do because they specialize in Hawaii loans and they're familiar with it, but we will also. So just keep that in mind. If you have some larger acre properties and you're concerned that it might be a rural property, give us a call and I'll take a look at it for you, because more than likely we can do it.
Yeah.
Awesome. Thank you for that. What about Lava Zone 2?
So we are doing Lava Zone 2 on a case-by-case basis. I've closed 4 loans in Paho. I just messed it up again. I always say that wrong. On Big Island, but those are established communities, right? So these houses have been there for decades. So these are established subdivisions, established communities. There is a Lava Zone 2 because the lava flows underneath the ground there. But I've closed several loans there, and even one was at 75% LTV. So again, we're going to look for the low. We're not going to do like a 90% LTV in a Lava Zone 2. We're going to try to keep it 75 or lower. We want to make sure that it's an established community and that they're able to get insurance for that lava coverage. So, and typically Lords of London does Lava Zone 2. So if you have a client that's having problems getting insurance, try Lords of London. They do Lava Zone 2 coverage. I'm not sure who else does. I just know that they do for a fact.
Great. Thank you. All right. Well, I do not see any other questions, Rick, LisaKathy. And how would you like to wrap up this afternoon, morning?
I'll mention one last thing just really quickly before we adjourn, and that is we also have the ability to be able to do foreign national loans as well, where you have people that are living outside of the United States looking to invest in U.S. real estate, either as an investment property or as a second home. No U.S. credit required, no U.S. income required whatsoever. So done people from China, Japan, Australia, Canada, et cetera, all around the world. So if you do have
Yeah,
someone like
Korea,
that, know that we can be a solution for you there as well. I'd be remiss if I didn't mention that. And then just last but not least, just want to say again, a big thank you to you, Judy and Kelly, and all of the attendees today. Just really appreciate you taking the time and the interest that you're showing in LendSure and potentially partnering with us. We look forward to it.
Thank you, Rick. We really appreciate you and LisaKathy coming today and sharing this great info with us. LisaKathy?
So I will piggyback off of his foreign national comment, because I know a lot of these banks only do Canadian citizens.
Mm-hmm.
So we do a much larger group of foreign nationals than most banks do. So please feel free to reach out to me if you have a client like that. We had one almost done that was great, and then the property fell through. But and they were a mixture of foreign nationals. It was a Korean, a Japanese, and a Canadian. So we had 3 different foreign nationals from 3 different countries that were getting ready to close on a loan. Unfortunately, the property fell through for them. But again, thank you all for coming. We will send a video of this out after this is over. You should get a copy of this webinar, and you have my contact information on this as well. So feel free to reach out to me if you have any questions. Like I said, I am always available from 8 a.m. to 9 p.m. Sunday through Sunday. So I don't take time off. So feel free to call me. If I don't answer, text me, you know. I'll answer quicker Monday through Friday than I will Saturday and Sunday, but I will answer.
Awesome. Well, thank you so much, LendSure, for being here with us today. Thank you all, HAMB attendees and non-members. If you are not a HAMB member, please go to our website, hamb.org, become a member. We are doing some cool stuff between education, our conferences, your CE credits, and of course, our great get-togethers and Pauhanas. Come join us. Come be a part of something great. Thank you so much, everybody.
Thank you very
Hopefully
much.
we see you
Appreciate
at the
it.
conference.
Aloha.